Now, next up on Startup Daily, we're looking at a scale-up that started as a traditional stockbroking business and has evolved into a fintech with a range of products. Maqro is a high-tech online trading execution platform, and it's about to conduct a third round of capital raising. For more, we're joined by co-founder Conrad Song. Conrad, thank you for joining us here in the studio today.
Thanks for having me.
Conrad, great to have you here. Tell us what makes Maqro different to other platforms.
Well, I guess firstly, like you mentioned, we started fairly traditionally. So we started 2016. Since then, I guess the idea really has been to just transform what we call sort of the wealth tech or the wealth management industry specifically. But really, just to sort of simply put it for you guys, we provide sort of institutional grade research, on the ASX stock market for clients, for everyday investors, really. And that's actually digestible for them. So yeah.
Oh, I was just going to ask, and is your research team in-house?
Yeah, correct. Yeah, so we have a group of analysts in our Sydney office on York Street, and also we have our North Sydney office, which is our advisory and sales team. And yeah, basically, I guess what we look to provide, is this sort of simple. Investing shouldn't be rocket science, I don't think. And so we've been focusing on just really providing a platform that's really effective in sort of communicating all of our research and ideas to our clients.
Oh, you've got to have a little bit of rocket science in there just so that we keep coming back for a bit more. But tell us, you've gone through a couple of raises and you've been building out the technology. What are the plans for this next raise?
So I guess just to take a step back, I think one of the biggest things that we're trying to address in this industry is this problem of lack of scalability and transparency, right? So just to sort of take a step back, I started in 2012 as a stockbroker for a mid-tier business, and it was very clear to us that you've got let's say I can manage 100 clients max, right? You've got 20% of those clients, right, that make up 80% of my remuneration, and obviously the firms. And so there's a natural imbalance between the clients that are worth a lot and the clients that might trickle down that list. And so as profit maximizers, like we all are, we can't expect advisors to call the smallest clients first. And so what we've created and what we've I guess used all the funds that we've raised capital so far with is a platform that allows us to communicate all of our recommendations, all of our insights at the same time to every single client, right? And really that scalability that we're talking about and that we're trying to implement, I guess it comes down to the fact that you can charge one guy $1 million, or you can charge 1 million people $1, and so we've gone for the latter, and I think that's what we're going to try to do. Yeah.
Or hopefully you can do both at the same time.
Yeah, well that's right. Really? Yeah, I think we're not necessarily targeting just this sort of younger, smaller market. We're expanding, right? So I think what's fair to say is the younger generation, my generation, these guys are going to be hopefully in 5, 10, 20 years from now, they're going to be the wealthy Australian retirees that we all want to manage. So really, it's more so us taking advantage of an opportunity, I think, sort of to capture a market by providing a solution that doesn't exist right now. Yeah.
And run us through the pricing structure. Are you charging people per trade or for advice, or is it some kind of membership?
Yeah, I mean it's we've set up the business in a way that we can work with anybody, right? So we have a research platform, so that's worked off a subscription sort of basis. So we cover sort of investing, so longer term investing, shorter term trading, and also small caps, so more sort of high risk stuff. Then also the client, and this is the beautiful part, we give the client the opportunity to decide whether they want to execute the trade themselves or whether they want to work with an advisor. So we have, we partnered up with probably one of the biggest fintech businesses in Australia to build a trading platform, right? And so our clients can execute the trades for quite cheap, $14.95 a trade, or they work with an advisor, and it'll be a much more hands-on approach. But that's the whole thing. Again, we're expanding our sort of customer base, but at the same time, we're not sort of singling out any specific market just yet.
So in that instance, if I am a small investor or if I'm a millennial looking to get in, there is any barrier to entry? It's like $100. I mean, it's still going to cost me 15.
Yeah, I mean, so there's a whole sales process that we'd be more than happy to discuss with the audience if they called in. But I think the biggest thing to, I guess, focus on for us really is that, the barrier to entry is quite low, right? Myself, if I was, let's say, not in the industry, firstly, and I wanted to work with some of the more incumbents out there, the banks, the bigger firms, I'm probably not going to get a look in, right? Yeah. From our point of view, we're taking everybody, right? Yeah. We're a very blanket solution, or one-stop shop for anyone who wants to sort of get involved. That includes the guys who are just getting, which we're seeing a lot now, right? We're seeing new investors enter the market with a discount of COVID, and also you've got the clients, I think, that are struggling as well, right? Investors who have been in the market for quite some time, and they might not have had any sort of capital preservation stress, so they're hurting. And so there's a combination of different audiences that we're trying to cater for, but really, it's quite simple to join. Yeah.
So you've gone from the 1%ers to the 100%ers.
Correct.
I'm really interested in what you're seeing overall in the market today, because there's been much discussion about what they've called the Robin Hood rally. There's a feeling that retail investors are pushing prices up. We've talked about the fact that given the size of institutional investors, that's not the case. What are you seeing though? You're seeing a lot more activity.
I mean, without giving too much away,
right? Just a few trades.
Of course. I think it's really interesting. Firstly, you've got something that we've never experienced before, right? But yes, I would have to agree that this recent rally that we've seen in the market is retail or short covering, right? Also, you've got the JobKeeper stimulus package that's been it's really difficult to look at unemployment figures right now and actually take into consideration the fact that the government's dumping a lot of money into these companies, right? So we're quite bearish, right, short to medium term. That being said, we're still looking for opportunities to take advantage of within companies that we think will outperform in this environment. But we had I think what was it on Friday, Texas and Florida come out with their imposed restrictions again, right? So that's a reversal from where they were. You also had the US Fed come out with sort of a signal to the banks to cut divvies and reduce their buybacks, right? And so one of the interesting things was Goldman Sachs was down about 7 to 8% on the day on Friday, right? So all of this, in conjunction to all of these concerns that people have with coronavirus, I think it's quite clear that you have to be prudent, right? Most of our clients were quite fortunate to be able to hedge off a lot of that downside. But the question is not whether it's going to go up or whether it's going to go down. I think it's, are you in a position to take advantage or protect yourself in either situation? So, yeah.
Sounds like you're relatively cautious at the moment. What are your plans for the next 6 months for the business? What are you looking at in terms of timing of a third raise and your growth?
So for us, I mean, it's really exciting for us. I think the biggest thing, obviously coming out of COVID-19, or when I say coming out of it, we transitioned very quickly, right? So we had this situation where we had plans to grow before COVID happened, and I think people are wired differently, so companies, and we decided, well, we're not going to let a pandemic get in the way of our growth plans, and so we effectively transitioned to a remote working force quite quickly. On top of that, we were sort of focusing on optimizing our infrastructure, right, so that we can take the growth, right? I think that's the biggest problem that a lot of startups have. And so for us, really, the dog days are kind of over. And so we're focusing now on raising the capital to sort of push the growth, right? We want to do our third raise hopefully next month, right? That's our plan. We'll be looking to effectively just push our brand name out to everybody, and hopefully by sort of end of this year or middle of next year, will be a household name. That's the plan.
Oh, fantastic. 100% brand recognition.
That's it.
Conrad Song from Maqro, thanks for coming on. Best of luck with the raise. Hope to get you back when we hear the good news at the end.
Sounds good. Thank you very much.
Thanks for your time.
Conrad.